Hi, it's Nero here from Investment Rise, and as I record this episode, much of Australia is in lockdown, so if you're in lockdown, I hope you're staying safe. But what I want to do here is I want to talk about what happened to the property market in the month of July and what I expect to see going forwards, because there is no doubt that the Australian property market is currently in a massive property boom. Prices across the country rose again in July, so that is now the 9th month that property prices have risen in a row. So prices started to rise in October of 2020, and if you've been following my work for any length of time, you'll know that it was then that I said the property boom is starting October 2020, and prices have risen every month since then. And so you've got to be wondering, if you haven't yet entered the market, especially as a property investor, have you missed out? Or have prices now risen too far? Are they about to correct? And that's exactly what I'll talk about in the later part of this episode. But right now, I want to go look at some data. I want to look at the CoreLogic Home Value Index for July 2021. Okay, and what we can see here is that in Sydney, price growth was 2% for the month of July. Now, Sydney is the city that had the sharpest reduction in the rate of property price growth, down from nearly double at 3.7% back in March. Okay, so now having said that, that's still not low. I mean, as we go through this table, you'll see that Sydney still had the second highest rate of price growth across all capital cities, despite the fact that price in Sydney are so much higher than all other capital cities, and even obviously all regional areas in Australia as well. Okay, so yes, Sydney 2%, but that was a reduction. We've got Melbourne having 1.3% growth. That's just for a month. Now, if you think that 1.3 isn't a lot, and if you've seen past episodes, you might know that I'm not a huge fan of the Melbourne market for a couple of other factors. But the fact is that if you have 1.3% per month, you annualize that, you're looking at 1% times 12 is 12%. At 0.3% times 12, you get to some pretty significant growth, because remember, a property boom is any market that rises by more than 10% per annum. Okay, so even Melbourne, it's looking at more than 10% per annum if this rate of growth continues. So 1.3%, still significant. But Brisbane, leaving it well and truly behind, as it has almost consistently throughout this boom. Property price growth was 2.0% for the month of July. Adelaide, 1.7%. Perth, quite abysmal, relatively speaking, at 0.3%. And I've spoken previously about how I believe that the Perth market is the market that's starting to definitely slow as a city in terms of price growth. So that's a market that if you haven't already got into it, if you were to buy now, yeah, you might make some money. You won't necessarily lose money, but the capital growth, I don't expect it to be as strong in Perth as many of the other areas around Australia. All right, Darwin 1.7%, and Canberra was the winner for last month at a whopping 2.6% capital growth just for the month of July. All right, so property price growth is definitely continuing across the country, but as you can see, some markets are starting to slow, some markets are being very, very consistent, and that's something you really want to be looking at, because in Australia, I think going forward, different markets are going to start performing differently. So unlike, say, the past 6, 7, 8, 9 months where every market has risen in value and quite consistently, you're going to start seeing some markets start to slow because of affordability. You're going to see other markets continue strongly in terms of property price growth. So I expect to look at Sydney, which has been almost the best performer in terms of property price growth for the last 12 months. I think it's going to come back to the field a bit. I still think it's going to have some good capital growth, yes, and I think that a lot of that was going to be driven by more of the higher priced markets. But I think median price points around Sydney and suburbs that are below the median price point, I think those rates of growth will be a little muted, a little stunted compared to some of the other areas. So definitely look at doing your research. But the fact is, though, I still believe that property price growth is going to continue for some time yet. I think this boom is now going to run even longer than many people have expected. A lot of people thought that the boom would sort of run out of steam by the end of 2021, maybe 2022, but I think you'll find that this boom is going to now run for many years yet. I'll talk about more about the reasons why in my next episode, so definitely look out for that. But the fact is, prices are rising in some strong markets every single month. And when I'm talking strong markets, I'm not just talking about the city. I'm not saying, okay, look, go and look at Canberra and buy anywhere in Canberra, or go buy in Sydney and buy anywhere in Sydney. No, in each city, different suburbs are outperforming others. All right, and so you really want to start looking at, okay, well, which suburbs are you going to target based on your price point, based on what kind of rental return you want? Do you want neutral or positive cash flow, or you're happy to go negative? You need to be aware of the different cash flow profiles of different cities, different markets, but then start targeting suburbs that suit your profile, that suit the properties that you're looking to buy, that are good for your strategy and your goals. But certainly, do I think that you've missed the boat? No, I think that property prices, as I said, will keep rising for quite some time yet. Yes, different markets will perform differently, so you can't just buy anywhere, throw a rock and buy anywhere that it lands. You're going to have to do some due diligence, but from where I see it at the moment, it's certainly a case of, as a property investor, there are some great opportunities yet. Yes, you might have missed out on the capital growth that has gone from October. Nobody can go back in time, but the question is now the right time to invest? Here's what I can tell you. As expensive as property prices might be right now, in the good areas where demand is greater than supply, where there's good jobs growth and tight vacancy rates, here's what I can tell you. Property prices will never be as cheap as they are today again. Okay? Let me repeat that. In the good quality areas, prices today, you'll never see them this cheap again. And what I mean by that is that I expect them to rise more. And if you think something's expensive now, I think if you go forwards a year and look back on it, it will seem cheap. Think about the Sydney market, Brisbane market, Melbourne market, Canberra market. Pick almost any good market. Think about where prices were a year ago. Did you think they were cheap a year ago? If you're like most people, the answer is no, right? But today you're probably wishing, gosh, if only I'd bought an extra property in one of those markets a year ago. Okay, so I don't expect property prices to get any cheaper going forwards. So definitely do your due diligence, because some markets will perform differently, but there are some really good opportunities to be had going forwards. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.